Hi, my name is Felix Fry.
And I'm Marco Rajnica.
We're here to find great trading opportunities that target 150 to 400% returns. And you? Well, you're going to help us do it every single day. So welcome. This is the Winning Picks Podcast. This podcast is for educational purposes only. Options Geek LLC is not a broker-dealer. Options Geek LLC, Felix Fry, and Marco Rajnica are not registered investment advisors. Keep in mind, options involve substantial risk and are not suitable for everyone. Please consult your own investment advisor before doing any trading. Make sure you read the full disclaimer at the end of this episode.
Hey there.
Hey, Marco, how are you, man?
Good. Can you hear me?
Good. I could. Can you hear me okay?
Nice. Yes, good.
All right, good. How's it going? All right?
Yeah, pretty good. I mean, I'm happy with this GM progress and stuff.
Yeah. Oh, your January 29 calls or January 29 calls or something?
Yeah. I mean, they're going to call me the king of one lot, 150% because
hey, that's all
it
right.
happened again with this new one that we picked.
Good.
And,
Good.
I'm looking for more ways to make money because, earnings are coming up. Some stuff is happening. So,
Good. Good. So what you saw the news obviously today. Well,
Yes.
It's incredible. I mean, look, we were on it, right? We were on it from 2 weeks ago. This cruise is the jewel, right? That is the jewel. So looking into GM, that's a jewel. And if they uncover that, then it's worth, it's worth a lot more than Microsoft. If Microsoft is paying money today to value it at 30 billion, you better believe that when you buy it, if that becomes a separate entity, then you're not going to be able to buy it for 30 billion like Microsoft. Right now, you could buy GM and inherit that company, inherit Cruise, which is, I think, why the stock is up today. I mean, obviously, it's a good deal, and it values General Motors. So, tell me about these January 29th. To be honest, I haven't looked at them. So, where you bought them? You said 175 or something,
right? Yeah, and I sold them at I bought them at 160, 170, something like that. 160,
okay.
And I sold them at 380.
Okay.
So that was pretty good.
Oh, so you sold them already?
Yeah, I sold them.
Okay. And that's it. You're done now? You're done? Or
what? I don't think so.
You go back to the
let me show you
the apple. Go back to the apple tree. Okay, go ahead.
Let me show you what I'm looking at. So I've been looking at these 58s here in January 29th.
Okay.
I'm seeing a lot of volume. They seem cheap. It's a term I shouldn't really use, but they're only $1.
Yeah, cost less. Yes.
Cost less. So I was thinking about maybe rolling into this one because if it jumps to what is it? So 662. So maybe around 64, 5.
Okay.
If it makes a sudden jump, I make some money. If it doesn't, I lose 50% of this, which is not a big deal. So I was just thinking about, what do you think about this? Is this good, or maybe I should pay a little bit more and wait for the earnings?
Okay, so I would say the first thing I would say is here. You want to get into my screen here?
Yeah.
Can you switch to my screen?
Mm-hmm.
Okay. Tell me when you're there. You there?
Yep.
Yeah. Okay. All right. So the first thing I would say is, so when I'm thinking about choosing expirations, I think it's important to look at these numbers right here. See these numbers? These are these are the at the money IV numbers. Okay, so it's just an indication. It's just where things are. And if I look at the ones where you're buying here, January, 1 week options is very different. IV doesn't even matter. The calculations could be off a little bit. It's not really a volatility play. But when you get 3-4 weeks, I could say you can start looking. But I use this as an indication when this is, see this 58, and to get earnings are on February 10th. To get earnings, this is 60. So usually you're going to see, that the earnings expiration month should be the highest out of all of these. Okay. Should be, right? If it's not, then potentially this one is if this one is higher, then this one is either expecting something, or maybe there's an event in the next 2 weeks, but it should be that this one is higher than this one. Even it should actually be higher by a decent amount. It should actually be higher by, let's call it, usually you see things like 55, maybe even the low 50s, and this is 60. I'll give you an example because I look at it all the time. Let's just look at pins.
Wow.
So you see the difference. Which is the highest? The earnings. Now, let's think about that just for a second. So I want you to logically understand things so that so I want to go back and just fill in the blanks if you haven't gotten it. But implied volatility is simply has a direct relationship with price. So as the prices go up, implied volatilities go up. As implied volatilities go up, and prices go up. Same thing on the way down. If prices go down, implied volatility. It's a formula. It's a Black-Scholes formula. So you stick in price at a lower price, the implied volatilities come in lower. So keeping all things the same, mind you. So this is basically saying that these prices, relative to these prices, the market is saying that there's a higher volatility here, and that price in general a little bit more expensive than, relative to these other names. Okay. Now the question is why? Well, the logical answer is that very simply that why do you think that the earnings is there, and earnings is going to announce something, and what happens when earnings are announced? Generally, stocks move up or down. They're going to move some. So the market is showing you here that they are anticipating a large move in Pinterest. Okay. In this expiration, now earnings are estimated on the 4th, and not so much over here, meaning it's going to trade like a stock. And if you look and you see how the volatility, the IVOL goes down a little bit, it's sort of giving that indication that, hey, it usually trades at like 60 to 70. But because of earnings, we're going to make these prices high because we're not going to give it away. We're expecting a big move. Last time Pinterest moved big, so we're not going to give it away for free. So when I look at, see that was a big difference there.
Yes.
Now I look at General Motors and I see not that much of a difference. Okay. And I say to myself, is this everything is up today. People seem to be buying the 1 week and 2 week options. You see by how much it's up. Okay. So I look and then I'll click on January 29th, and like what you just said and what you showed me, looks like people are actively sort of trading the 58s, 59s, 60s, and they look like they're buying these options. Okay. So they've bought them, stocks going up here. You see the volume. Okay. So it looks like they're buying these things. Okay. Applied vols up. Okay. So now what I'm trying to get at here, I wanted to show you. So we see the buying, we see them buying in January, but these two numbers, okay, when the professionals, volatility traders, and even directionals, you can, this is like a higher level directional trader. You could sort of think about doing spreads. Okay, so some people like doing spreads, and in this case, it might be a calendar spread or something. I don't go into it too much because it does take a little bit of understanding, but the idea is that these two should not be the same. This, like, these two are not the same because this one has the earnings and this one doesn't. And so these numbers might be a little bit too high. So if you're thinking about buying these numbers, okay, you might be buying an option that is relatively too high versus the February's. So I would say instead of paying, which ones are you looking at? The 50, the
58s.
January 58. So instead of paying $1 for the 58s, you might consider paying $1.50 for the $1.50 for the 55 for the 60s. Okay, it's sort of like saying you want to pay a little bit more because you get the earnings. And remember, we're talking about the CEO coming out speaking. They've been doing deals in front of the number. They put out, which I don't think was I believe it was on purpose. It's not something that they just kind of put out there. They think through exactly what CEO Barra is going to say to a crowd at the beginning of the year, and they actually put out flying cars as like a major part of their presentation. That was done, I believe, to tell the world we're not this old GM anymore. This is a new GM. This is a leader in EV, in technology, in software. And now they make this big deal with Microsoft. Now, that's not coincidence either, right? You have Apple coming out in the last couple of weeks talking about getting into the game, and Titan and Project Titan and EVs. But it's, Apple, remember, software, that they're starting with software. Software, I can't say it enough. Software is the winner, right? They're the ones that are going to win. Tesla, Apple, Microsoft, Google, you have these other private companies. This is where, autonomous driving plus EV, this is where the next phase is. And I think that it's important to really focus on the software. GM is focusing now clearly on the software with this cruise. Microsoft is interested. They don't want to be left behind. They need to get involved. So, they call up it's 2 weeks after this rumor that Apple's sort of starting to rev up their engines, and then, Microsoft jumps in with GM. It's not coincidence. This is a chess match. This is a game of years in the making, and the pieces are starting to be moved around the board a lot quicker than they have been in the last year. Yes, the talk has been EV, but I'm trying to tell you that I think the next phase is this more talk about autonomous driving and the software that drives these cars. If GM announces a spinoff of Cruise, like I said, $30 billion is what Microsoft paid. If Cruise becomes its standalone company, you better believe that it's likely you're not going to get the same price Microsoft paid. You might be able to get it today if you buy GM, but you're probably not going to get it in the marketplace at 30 billion. So that's where, and so what is that worth? What is Cruise by itself worth? I don't know. The market's going to tell you what it's worth if they separate it. They're trying to tell you now that it's worth something because GM as a whole is up 10%. So, and that might be attributed just to Cruise. So if GM is a 75, $80 billion company, and the market's up 10% or 9%, 10% on this announcement, they're basically saying it's another $7 billion on this because of Cruise. So something we've talked about, something I like. Your option, that the one that you chose as a placeholder, I liked it. I still think you could have chose February, but look, you made money and you got the move, and that's great. I would consider the next one, perhaps to actually, if you can pay $1.50 or something, 70 cents more, $2 higher, but get the actual earnings announcement, might not be a better trade. But this vol, I think, has come off a little bit from the mornings. You could see in January, let's just see here, January 29th, the 58s. Let's see, in the morning, you could see, look where it got to. It got to 69. Okay, so that's when, if you're paying it around here in the 60s and the Februaries are still, this is higher, January 29th is going to be higher than February, then clearly the Febs are better. Clearly. Here, it's starting to get below again. See how the market adjusts? Yes. The market says, you're going to buy these? Somebody comes in to buy the Jan 29s, we're going to show it up here, right? Remember, Marco walks into my store. I see him coming. I know he buys eggs and sandwich every day, an egg sandwich every day. So I'm going to raise my prices to $6 because I know Marco's a buyer. Well, they see buyers coming in January 29th. They raise their prices by 10 o'clock. After 10 o'clock, they start lowering their prices. This relationship, okay, we talk about the relationship between puts and calls, and we've talked about that on and off this forum. But, now I'm telling you that this relationship between expiration versus expiration with an earnings should also be understood. Okay, so relationship between calls and puts, we did that with the short squeeze and with quant, whatever that thing is. And now we're looking at General Motors sort of expiration versus expiration. So this went haywire in the morning. It went to like 67, 68, 69 vol. I'm sure this one did not go as high up, but we can actually just look at it. In the morning, we were looking at 60. See how it was 60, 61, 62 in the 60s? You see that?
Yep.
And we saw before that the other one was 68, 69. That spread went out of whack. There was a buyer there, lifted the January 29th way too high, and then the market makers were just pushing because people were buying. They allowed people to pay it, and then the February's are still 59, and then afterwards, what happened? It all comes back down to sort of this. You see, the January's now go below 59. Okay, and it should be that. That should be the world is in the right place right now with the January 29th lower than the February 12s. Okay. So if I'm looking at this right at the morning, and if I'm a market maker trading General Motors, I'm at Bank of America and I see General Motors, I might be selling those calls in the January 29s because I know that spread is going to come back as a spread. Now, I'm playing for pennies, 10, 20 cents. I'm not playing the directional game, but there's also opportunity once you get to understand this to actually, and value, right? I'm always trying to help you understand value, right? Forget about what the implied volatility and making those 20 cents. I'm trying to help you understand value. The value when January 29 is 68, the value is better in their earnings. Is that clear?
Yes, because
You have
I
more
mean, in the
questions,
earnings,
bro?
you never know what's gonna happen, what they're gonna say, and they might
Exactly.
announce something.
Exactly. But right, yeah, exactly. But that's really why people are buying this, right? We're long Junes because we're probably going to get two earnings. This cruise, the idea with this cruise was, or with a spin-off or a split off. I mean, look, it's always difficult to know exactly when it's going to happen or when something's going to happen. However, given the idea that the GM CEO is under a lot of pressure to get this stock actually moving, right? People have been in the stock for 5 years and are like, you got to get this stock up and go. Everybody's talking about EV, and still we're one of the biggest in the world and nobody gives us any love. You got to do something. Right. And people start losing their patience, investors. And that's when you start getting activists or big hedge funds with big deep pockets and saying, this stock is worth $100. And you're sitting here talking about some factory issues when really you should throw out, an Escalade with wings on it. And bam, there you go. An Escalade with wings. Tell the world we're an EV company. Tell the world we're one of the leaders in technology. This isn't a stale company. This is a brand new General Motors. So this is what we're playing with. This is what it looks like. Where it goes from here, no idea. The idea was that it can get into the high 50s. But if you get this cruise thing, it's a game changer. If you get a spin-off or EV section goes apart, I think they'll spin off cruise. I don't know when. But we have a lot of time, and the stock is going to ebb and flow. We're trying to catch a big trend here that is underloved, and I think that that's something to keep on watching. Any dips on this thing, people are dying to get into this thing back into the 40s at this point, right? Now they're saying, "Oh my God, Microsoft is in." Microsoft just paid $30 billion valuation for the cruise thing, and it's like a small piece of GM. Right? Think about that. Okay, so
it's crazy.
Anyway, so that's GM. That's the news today. Stock is still loved. They're still buying calls. And if you think about what they're buying, right? Let's just look at a target stock price, because they're not dumb. These people could be getting out of some here. But if you're looking at the 58s, you're talking about, just take a look at that. 58s is getting towards $65 that they're looking at, right? Yeah, $65. So if someone's paying $1 for the 58s that expire in 2 weeks, the risk reward is anywhere $65, $64, 65, depending on your confidence level. So 65, 64. This is, yes, it could be a flyer, and that's why they're doing it, but they're active. They're active in the 58s, 59s, and 60s. It's telling you what I just said, that they're starting to unlock that. They're starting to show people, they're showing the world that this isn't a $30 billion company. This is what Microsoft paid. Microsoft doesn't pay the top. Microsoft pays the bottom, right? Microsoft is the determination of, okay, this is the next thing that's going to work. So when they say Microsoft pays 30 billion, what's it really worth to us? Oh, General Motors also has to probably give Microsoft a deal to sort of play nice with one of the biggest software makers in the world and a large player, and maybe team up, and there's other synergies. So these are questions that everybody's trying to get answers to right now. What does it mean? How much is it worth? What's going to happen in the earnings? Expectations now become high, right? For her to say something more, for her to potentially spin something off. And people are, look, they're buying Marches, they're buying Febs. If you start looking at where they think things are going, you're starting to talk about $70 on 50. So 70, 71, this is sort of the type of stuff where, you would think that you gotta give a little bit of respect to what people are buying and why they would think about buying option, at the money options or a little bit out of the money options for $3-4 in General Motors. They got to be thinking that, or they could just be getting out. I'm just not sure. If you look at General Motors, let's just go look at General Motors. Look at General Motors here.
And inspect it too.
Inspect it, sure. Okay.
Oh,
So
nice.
you look at General Motors. Let's just remember, we got to give context here, right? So let's go here and go back a couple of years. 10 years. Let's just go 10 years just to show, okay, what this stock has done. 10 years. 10 years ago, the stock was $30. Look, 2011, stock was $30. You own stock here, and you're saying, I love GM for the long term. I think it's going to go. You're holding this stock for 10 years, and it's doing nothing.
Right.
And finally, I mean, we talk about this. David Einhorn is in the name, saying exactly what's happening right now, exactly what's happening, and nothing happens. Nobody's listening, and in fact, the stock gets crushed down to the teens. If you were going to get out of General Motors, if you had any thoughts about getting out of General Motors, you're likely getting out here, likely. Okay, right? It's hard to think the stock is not moving. I'm frustrated. And then this happens and it's like, get me out right now. I don't care. Get me out. If you've held through this and now you've come back, you're not selling. So any of these holders, they're not selling. There wasn't a ton, there. Okay, 450 million shares. This is big, but I think there's, you're a top holder in this name. And if you don't sell this disaster, then you're not selling because the stock's up to $10. You've been waiting for 10 years for this thing to happen, right? So you got to think about that. Who's the seller here? Maybe there's a couple of guys that, they bought at 23, they want to peel some off, but, are you really selling after, and we can do instead of log normal, are you really selling because, the stock jumped $16 from here? Meanwhile, for the last 10 years, it did nothing. So while the market has, gone up since 2011, a significant amount, EV names are through the roof. So maybe this is just the beginning of a much bigger trend in something like a General Motors, where General Motors starts being valued according to Tesla, like the Chinese stocks, Li and NIO and XPV. The lead horse is Tesla. Tesla is 800 billion or whatever it is, 900 billion. That's the lead horse. Everybody's taking their cue off the lead horse, right? And the lead horse is 900 billion. Well, what's the opportunity for a Chinese Tesla? Well, that's got to be valued at some percentage of Tesla, you would think, right? You would think some percentage. And so the same thing goes with General Motors. Tesla is the leader, but General Motors, people start to say, they're pretty damn good too. And they're only valued at 78 billion, and Tesla's at 800 billion or 900 billion. Should it be 10 to 1? I don't know. I don't know if that's the right answer. I would say probably not. I would say probably not. But should it be 10 to 1? I don't know. But that's the game. The game is the lead horse is not. Now Tesla drops to 300 billion for whatever reason. Not saying that it would, but you're going to see the Chinese stocks start trading lower. It's going to deflate. The lead horse deflates. The whole spectrum, the whole EV sort of idea deflates. So these are things to think about. So when you're thinking about saying, you know what, I want to get out of General Motors, you got the lead horses in the industry still humming along, and this is 10 years in the making, just getting going. Right. While Tesla was ripping over the last year, this thing was just trying to get back to scratch. So that's General Motors. That's sort of a name we're involved in, a name we like, a name that people can continuously play. I think people are dying to get back in near the 40 level. Once something like this, I don't think it can really. Well, it always can. Let me not say that. I think that if it does, it's a mistake. I think that the sum of the parts. I think Morgan Stanley had something out maybe 8 months ago talking about $70, $75, maybe even getting to $100 on some of the parts. Now, if they actually do that, and that was 8 months ago before EV went 3-4x, this could be a significant play, So something to watch. We can move on, from there. But if, I would say you're doing the right thing by trying to stay in the game. I would simply go back to this relationship between expiration versus expiration. Okay.
Thank you. And just one quick question. William asked. So he asked, why not choose February 19th?
For sure. There's no. I just thought, a one lot, you're not going to get hurt. But yes, for sure. This is just the earnings event. You're paying for that. But there's no doubt that February. Personally, I usually try to trade the months, the February's, the March, the months, not the weeklies. But
Mhm.
I just chose that because you were trading the Jan 29th, and I just showed you this is where earnings was, and I wanted to show you the relationship between expiration. But William is absolutely correct. You can trade the Febs. They're probably going to be a little bit more liquid than the weekly Feb 12s. Probably a little bit, although GM is fairly liquid. But yeah, there's no, between this and this, there's do you want the extra day? Do you want the extra week? Sorry, to potentially catch more momentum after the announcement. Here, if you announce February 10th, I don't know if that's after the bell, but if it's after the bell, and usually they are, then you're going to get just the
Couple days,
11th
yeah.
and the 12th, just a couple of days. Here, you might get something, and over the weekend, the analysts do their work, or somebody comes out with an upgrade and you get another week. Sure. I mean, there's nothing wrong with that. I have no problem with that.
Cool. All right. Good story on GM, but now there's a story that you like a lot, and it's Activision.
Yeah. So this one has been this one's been on my radar for a while.
And I've seen it pop up. Yeah, there it is. Right.
Okay. So yeah, Activision, pain in the butt because it doesn't go down. It never goes down. And I'm always looking to kind of like, it went down a little bit, and I'm looking at it here, and it's like $3 after going up $20-something. But this is a good story. ATVI. This is, they have the largest games in the world, the biggest games in the world. They hold the records for sales on basically like the top several games. They have, you're going to probably know this better than I do, but Call of Duty, World of Warcraft, WOW, and then Diablo 3, I guess, was the largest selling game.
Yep.
I don't even know what Diablo 3 is, but I see that they had the record. The big news about ATVI is that over the last 9 months, obviously there's a lot of free time that people have, and so people are picking up new hobbies, picking up things to do, and one of those things is obviously games. So games is at the heart of what people are picking up in their free time. Okay. Besides Pinterest, right? But
Right.
just kidding. But ATVI is what people are looking at now. Call of Duty, the big change is that Call of Duty became this freemium type of game, and I got to tell you, this model, I've seen it work firsthand with my kids. But this model of freemium is interesting. I mean, they have 111 downloads or players of this Call of Duty, whatever the new game is, but it's a freemium. It's basically
Warzone. Yep.
Warzone. You get to play. I don't know if you play, but you get to play,
Yes.
and it's free. And you're like, this is amazing. So you actually get to play the game. It's free. And now you got to think about the psychology. So I can tell you for a fact that I played Call of Duty in 2004, 2003, 4. It just came out. I had bought the Xbox and Call of Duty because I wanted to see what it was about. I hadn't played video games in, at that point, probably another 20 years, when I had maybe the Atari at my friend's house or whatever. So I was like Donkey Kong and Pac-Man, and I see this game and I'm like, oh, let me just try it. I get so addicted to this game that I literally, it was, I needed to be extracted out of my apartment. So I was 20 something years old. I remember clearly because I was 20 something years old. I was working on Wall Street, and after work was over, I was just running home to go play this game, and I'm playing by myself, and I'm like going through different levels, and I'm shooting, and it was insane, and it's highly addicting. And I just thought, wow, this after a month, and I'm completing so many levels. I'm thinking, I got to put this down, and never touched it again. Still have the Xbox there, never touched it. Actually thought about giving it to my son, but I thought, does it even still work? I realized they had like 20 different Xbox after that. So, but it's highly addicting. And what I see now, and obviously this is not new, but this whole social aspect that now I could act, I was playing alone by myself, and I'm just like playing like a maniac. Now they made it fun that you can play with your friends, you can play with other people, you're there. So you play this free game, and the idea is that if you're playing a game, you want to win, right? You're trying to win. You're trying to beat the enemy. You're working as part of a team. And that's part of the allure, is to be a good teammate and be the best you can be, right? And to be the best you can be, you need ammo. You need, without
Better
any, you need better guns. Without any camouflage, somebody could see you. You're getting the rest of the team's getting pissed at you because, you're getting spotted because you're wearing black and it's snow and everybody's like, there they are. This type of psychology, forces you to be part of the team and say, you know what, I need a white suit if I'm in the snow. And so you go buy it and it costs money, not a lot even. And that's the beauty of it. It costs $2, $3, $5. You want a bazooka gun, it costs you $10. And people would do that. Why? Because at the end of the day, you're being entertained. It's free, and you can go to the movies in New York City. And well, not anymore, but you used to. And it costs you $25 for one person and popcorn and a soda. $40, $50 on a date. So it's expensive to go out. And here you get to play with friends and hang out. You buy your own beer, and you're sitting there playing, and you get to buy things online for $2, $3, $4. People will do it. They're being entertained, and it shows that people are doing it. So ATVI's revenues are gangbusters. They're going through the roof, and even better, their margins are increasing. So you got the best of both worlds. Now the stock is trading up because of, I'm not saying anything new, but I think something like this could, once they figure out this formula, and this is the first time they did it, there is this, management's got to look at that and say, this works. And we're going to keep improving this, because they have 111 million users on the freemium model. Not everyone's buying yet, right? But I can tell you the game's addicting from firsthand knowledge, and people will buy. They'll spend $2, $5, and some people will spend a lot more.
Yeah.
Okay. Now this stock, it's probably going to go in a SPAC, but it's Roblox or Robux. I don't know. My daughter uses it, and my son now uses it. And I can tell you that I give them money, and I'm like, where's this money going? Like, I don't even understand what they're buying. So I started asking, what are you doing? What's going on? And my daughter's like, yeah, I just bought this Gucci shirt. And I'm like, okay. I'm like, how much was that? She paid $10 for a Gucci shirt on a character online. And I'm thinking to myself, so deep breath. I go back into my room and I go, Felix, you used to pay $500, $600, $700 for a shirt, a Gucci shirt, when you were running around New York City. And, $10 is, nothing, I guess, but for a 10-year-old to be thinking about buying a Gucci shirt online, and I'm going, oh my God, what am I creating here? But at the end of the day, the power, then my he's a saver. So he's buying one little thing, and he's like, he wants to buy this, one particular item. And so he's different. He's trying to save. My daughter's over there. She gets the money. She's blown it. She's got wigs. She's got clothes. She's dancing around in this Roblox thing. And then she's playing with her friends. And I'm just thinking, wow, this is like pretty incredible stuff. So there's something really big going on in this stuff. We were long it in the 70s, back a while ago. This is a name that the stock, let's just look at the chart, because this is the type of stuff we're trying to look at stuff. Frankly, I looked at UOA today, and there wasn't that much, but if I'm looking at, can you see my screen?
Yeah, I can see it.
So, this is the type of stock that, gets me kind of excited, because you have this big move, before 2019. This is just brand new, this whole freemium model, and it's happening right around here, right? And, COVID was going to help this stock anyway, because because it was in the heart of what people do when everybody's locked down. It's a benefit from the COVID-19, the coronavirus lockdown. So, this makes sense. Now, if normality comes in the next 6 months, does it come off? I don't know. This is a very powerful, it's a powerful platform. It's a powerful trend. People are into gaming. You got Xbox, Sony, new consoles. I look for things like this. I look for a change in the way the management is making money, and they have found a way that I think is very, very interesting. And I think that you can't underestimate that change. You can't underestimate, think about, you're the owner of a business and revenues are going up. And usually when revenues go up, you have to spend more money to get revenues to go up. And so your margins get squeezed. Here, revenues are going up and margins are blowing out. It's like, that's incredible. When you don't see that often, but you're seeing that here with ATVI. And on top of that, they're the leaders. They have the leading games. It's not like they're some rinky-dink, company that's just putting out a couple of games. They are the leaders. So ATVI is on the radar, relative to EA. And, I play with my son, the Madden games. I would say it's just not as exciting. They're up, and it's up because of this, but there's a transformation going on at ATVI that I think, look, Wall Street knows this transformation. It's just hard to project, that's a situation where it becomes very difficult to project how it's going to play out. Nobody knows. Is margins going to keep increasing? Are those 111? How are those 111 million players going to turn into revenues? Will they turn to revenues? What are those trends? We don't have enough data. We have 2 quarters. The more data that comes in, the more people are going to say this is explosive, right? 100. Not only that, but you're talking about social media, and this is you have a place where people are connecting, and there's an element of, I wouldn't say social media, I don't know what you want to call it, but this game playing together and being in, you have YouTube videos that have millions of views because there's an element of social media in this. So it's an element of social media. It's powerful platforms of entertaining, and it's, they're building a lot around this is like the game, but there's a lot of infrastructure being built around gaming. And so, obviously a long-term trend, but this is a transformation company. I think it's worth a look, and any dip, I'm trying to buy any dip.
Cool.
Okay.
Nice.
What else you got?
All right. So I got one that you talked about. You named it the Robinhood of China, and you were spot on. You were spot on. It's FUTU. Yeah.
Yeah.
And I mean, it's just incredible.
So FUTU, so they're still buying call. I saw it pop up. It's been popping up since we started talking about it, since that day when we saw it, but here it is. So, we said that the stock could double, right? It was $40 something and it doubled. Now what? Right now we're looking at it and go, okay, now what do we do? There's still buying calls I've been seeing, but I think now it's, you got to be a little bit careful, right? Let's just look at February call options that they're nibbling at here, and you look at the 80s. Let's just look at the 85s. 85s with stock, 84. Let's look at the 90s. So the 90s, they come in. It looks like they're buying. 112. Yep, looks like they're buying the vol they paid up here. And, so they're buying these calls, thinking this stock could go. And I'm not saying it can't go any higher. I'm just saying that at this point in time, at 40, I'm thinking this is a good story. Like, this makes sense. And people can go look back and see exactly what I was thinking and how we were talking about this. But, the chart looked good. But now you got a stock that's, doubled. It's $11.5 billion. People are still going to say, what's the story? The story is Robinhood of China. Robinhood is going to come out IPO maybe in 4 or 5 weeks. I don't know if there's new news today or whatever, but it's, they're talking about a $20 to $23 billion valuation in Robinhood. So Robinhood is in the United States. You're talking about, if this is the Robinhood of China, China has, 5 times the people that the US has, and probably 10 times the active traders that the United States has, right? So, if Robinhood is 21 billion, FUTU should be 45 billion, right? That's the story. That's how, we talk about how stories develop, and you're always relating it to the lead horse. Well, the lead horse is going to be Robinhood in that IPO, and then people are going to extract it from here. Can it double from here? Why not? I mean, I don't know. Why not? Why couldn't it? Especially if Robinhood, like I said, the story makes sense. Now, will it? I have no idea. What I will say is the following, that you could just start looking at, what you're needing. If someone's going to buy the February 19th, 90 calls for $8, it's telling you 113 here with with a confidence of probably 80, it's going to be around 120-ish. So 120 is 124. Okay, so 124, and this one is a lot high, is even higher. So you're looking at paying $8 for the 90 calls. You got to get to the 120s. It's not a small feat, even though it's done this in what, 2.5 weeks, 3 weeks. So let's take a look at the future. So they're still nibbling at calls, and Lord, look at that chart.
Right.
Okay, so we were here when we mentioned it. I think it was somewhere around here. Okay, and it was just sort of breaking out, or looked like it wanted to break out of this. I think that if you get one bad day, you buy those for $8, and you get one bad week and it goes from 85. You're talking about February 19th. It's how many trading days is that? 20 trading days left. So you get one bad week and it's going to hard, 84 goes back to 75. Now you got to get up to 120, sort of make that bet really work. Otherwise, you're just hanging on, trying to hope that it goes back up. At some point there's a stop. It's very difficult to trade and to trade with some level of risk management and have some level of risk management. What I would say, if you're going to trade these names and you're going to trade it, I wouldn't buy if your normal position is $500, try to sneak in there with 250, which I don't even think you can on a name like this. So you want to reduce. Remember the volatility. We're always looking at, what are we looking at? We're looking at when this volatility is over 100, even when it's 70, 80, 90, you start thinking about potentially buying a little bit less options, a little bit less, reducing the position because the volatility is so high, or you layer in because it's highly likely that this could get stopped very easily. So these are things, when you see 100, for sure 100, you see how expensive, not expensive in the way that you shouldn't buy it, but how much more money they cost than your average regular option. This is a $10 option, $8 option. You can only buy one for $800. So keep that in mind as you're looking at this. Just because if your regular lot was $1,000 and you said, oh, I can just buy the 85s for one lot for $10, that's $1,000. And then you got $1,000 in something like, I don't know, Coca-Cola or whatever, some other stock with a much lower volatility, or ATVI. Let's see where ATVI is. By the way, part of the reason I like ATVI is because the volatility is lower. It's going to be in the 30s from what I recall. Okay, so it's in the 30s. So you're talking about, you can buy the 94 calls, get earnings, and buy the 94 calls for 95 calls for $3, $290. You can't do that in the other names. This is a name that, okay, this is a normal name, name that we like or whatever. I'm not saying I'm choosing this. I'm just saying it's a name that I'm thinking about. I can buy $1,000 versus $1,000 of ATVI is not the same as $1,000 of FUTU, right? If $1,000 is my level per shares or per stock, then FUTU might be out of the running for me to sort of play this. Let's see what's going on here. To play this game.
Right. And then, I mean, if you had that one lot, $1,000, you're going to worry about it more. You're going to be thinking about it. It's going to take
okay. So the story. That's the story. You know it already. You've played the game. So that's exactly right. So that's what makes it difficult. Buying one lots makes it, you're in it. You're C. You have to be perfect. You were perfect in the General Motors. You got out. You bought the next one closer. You made some money. That was perfect. But it doesn't always work that way. And it forces, one lot forces you to be perfect on the entry, perfect on the exits, and then it's very difficult to always get that same dollar amount on each trade that you're trying to match. So, what else do you see?
Okay, I see Palantir. It's been moving up
every day. Every day, this thing is there. Every day. So the story here, obviously, is AI. The CEO, the guy is former eBay, well connected. They do a lot of revenues with the government, maybe too much. That's one of the negatives. The stock is trading up here 4%. The stock is okay. The negative story is that they have a lockup coming. So they had the IPO and they had this IPO, and now they are going to have a 6 months. Once you have an IPO, after 6-7 months, you have this lockup come up, which means that the insiders can actually come in and sell the stock. Instead of selling it on the IPO, they want to come in and sell it now. The stock is still, what was the IPO? The IPO was a little earlier than this. Hold on one second. Because this stock was a $10 stock. It came out IPO'd at 10. Why is this? Oh, I'm looking at PTR. PLTR. What is that? That's a Microsoft threat. Nah, virus threat. Okay, Palantir. There we go. So supposedly in February, 6-month lockup is there, and people will sell the stock. The idea is that there's a lot of people that want to sell the stock, and what I would say is that the stock is trading relative to the story that we're hearing. It's out there. IPO lockup coming up. Usually people, there'll be X millions of dollars for sale. What I would say is that the stock is not cooperating with the story, right?
Mhm.
Right? If there's millions and millions of shares for sale, then this stock should sort of be under pressure. And it was a little bit because it started talking about it right around here. I started hearing it coming up. There's this IPO, but there's this it's not going down, and that by itself is a story. So if you have here, this sort of triangle, right, and you see that it's breaking here a little bit on decent volume. It traded on Friday, and now today it's opening up and it's higher and it's still up there. You got to be concerned if you're short this name, looking because you believe this story that everybody's got to sell in front of this IPO lockup. You might get caught here a little bit. It says mid-February, but this is 1 month, 2 month, 3 months, 4 months, 5 months, 6 months. So maybe it's mid-March. I don't know. I'd have to look at I have to look at when that will have that lockup date. But the idea is that this doesn't look like a very weak stock with a story going around that everybody wants to sell it. The thing came out IPO'd here. George Soros is big in the name. There's a lot of guys that are big in the name. They've made a lot of money, and there are put buyers in the name to protect against, can you blame them? The stock went from 10 to 33 and they want to protect a little bit. I mean, can you really blame someone? Remember now, here's another thing to think about. When someone is long stock and buys a put to protect as insurance, what did they really do? They turned that into a call option. So buying a put plus getting long stock is the exact same thing as whatever strike that put is, the strike of the call. And that's the relationship that we keep talking about with puts and calls. So when someone's buying puts just for insurance, what they really own is a call. And maybe they're not going to sell. Maybe there's not going to be all this selling that's going to be done. Maybe there is. I don't know. But the story is not jiving with what I'm seeing. You see it too, right? This is I'm not making it up. It's the story is not jiving with what we're seeing. The stock has held, and it's trying to break out of this potential triangle, flag, whatever you want to call it. And and you got this 50-day moving up. So it's a UOA every single day. I mean, it doesn't stop. It does not stop. So I also see the MACD, right? If we look at the MACD, the way I read this is it took a lot to get here. The MACD goes up, and then this is sort of releasing that energy. The MACD, I call it, in my mind, I think of it as energy, and the MACD sort of releasing the energy, allowing the steam to sort of come out so that it can get revved up again and make a next move higher. This is what it's doing. It's sort of like a lot of energy, relieving that energy, but the stock doesn't go down that much. It came from when it was here and the MACD was right around here at 1, it was trading 10 to 15. Now everything has come back. The steam has come out. It's trading at 0.51 again. And look where it's trading. It traded 23 to 28 here. So, this held a new range. Who knows what's going to happen? I think it's looks bullish to me. I see them buying calls, even though in the face of knowing that there's, supposedly a lot of selling. But some people, I did see a big put buyer here. Could be just protecting. Here, this put buyer is not stopping today. It's been here pretty much all day. And,
Wow.
he's buying puts, buying in the money puts. He's buying the 29s. So he's basically stopping himself out at 22. Is he doing that versus stock? Like, does he own stock? Or maybe he's not. And we don't know. This is one where I don't know.
It's a pretty hefty premium, so it's got to be a big guy, right?
Yeah, it's not a small guy. This is a guy that either, he's using this to short. Some people think it's not worth this, and they have too much concentrated money with the government, and nobody knows what they really do. Their product is geared towards the major corporations, but the major corporations are trying to do it themselves with AI. So it's sort of like a la carte AI, maybe. Nobody's really sure what they do. Soros is in the name. He's saying he wants to get out. You got 0.72, Steve Cohen in the name. You got a lot of big players in this name. But there's a lot. There's calls and puts being bought on both sides. So I can never make sense of what's actually happening here, because I do see these puts, and then I see a lot of these calls. I see the story of the IPO, and I see, that the stock is trading strong. To me, this is strong. I wouldn't even mind taking a shot, betting that maybe some shorts here are wrong. And remember, if everybody hears the IPO news that they're being sold, I mean, people sell stock, right? You get, we got to be thinking what the average person is doing. That's how you
Right.
sort of got to think about it. But all right, so that's Palantir. What else do we got? Do you have any, just in general, any other questions?
I've seen one DDOG, but we can skip to a question while they're on the chain already. So
Okay.
you were looking at that put, right? So
Which one?
the 27,001, I think it was in
Palantir.
Palantir, yes. So my
Okay.
question is, in now I've learned that on the call side, when I click on volume, see the modal, I can tell apart, IV's up, so that means most likely they're buying. Now, when I was looking at puts, I wasn't really clear. Is it the opposite? Is it the same? How does it actually work? How do I rate it?
Sure. So, yeah. So just because it's puts is what you're looking at. When you're looking at IV, just it's very important to it is very important to understand that IV and price are directly correlated. So there's a direct relationship. If we're trying to figure out if the price of the puts were going up, I would say this first thing I'm looking at is the IV for the board. Is it going up or down? In this case, we see Palantir. The IV for the board, you could see, is generally going up here. Okay, generally. Then we're looking at the individual name, and now I want to see if the IV is going up in the individual name. Okay, so complete, the complete pictures across the board. Okay, prices are going up for whatever reason. There's buyers or the market makers are pricing. There's news, but for whatever reason, prices on the board are rising. Now, is someone coming in and paying more? And it looks like it is, right? The IV has gone up here. It's showing a positive number here from yesterday. It's gone up and they continue to come up. Now, I'll double check it by sort of looking at the heavy volume, and I'll look at it and I'll say, okay, I see more on the ask. That's good. I will also start seeing, okay, at 12:00, look like it started around 10:30-ish. So I might just go back to 10:30 and look and say, okay, 670, 670, 675. Okay, it looks like somebody was taking it higher before putting up the bigger print, 685. And so, okay, so this could be, this looks like a buyer. So I'm verifying IV on the board, IV on the stock, on the actual option. Then I'm looking at the prints quickly. I'm trying to see how the prints was, how the actual dollar of the prints, the premiums were trading, 5 minutes before and 5 minutes after. What happened to the stock after the trade? So it looks like they were buying, and you could see that the stock traded lower. Okay, that would coincide with when you buy puts, right? And you're buying a lot of puts here, here. Eventually, it starts putting enough pressure on the stock that the stock's trading lower. Okay, so that sort of makes sense. Everything is making sense. I'd say it's a buyer, right? And eventually, the implied vol comes off a little bit, and there you have it. So I would say yes, there's a buyer of these things, and I'm not, I'm really. It's not that it's because it's puts that implied volatility's got to go down. No, it's always the same. Implied volatility, if there's a buyer of any option, you're trying to look for implied volatilities going up, going up. Now, the way it's different is that if you're buying puts, then it's going to put pressure on the stock price. See the stock price?
Yep.
Okay. If you're buying calls, it should put upside pressure on the stock price, and you should see the stock price go up. In general, it's a general thing, but that's how you're sort of looking at it, and you're trying to read this board.
Okay.
All right.
Okay, good. Thank you. Yes.
Okay, good. Actually, you know what? One thing that I would show you that I've been working on for everyone. So if I look at SPY, what I've tried to do is I'm trying to get people to. Some people may have seen it because we screwed up here a little bit, but I've built this. This is in development still. And I'm still. So spare me if, don't kill me if it doesn't work properly, but it should work. But, we have something like the SPY here. So we would click on SPY. It's trading 370.79. I never know why this says, I don't even know what this is, but it is the SPY. It's trading 379.16 up 346. I can look at calls. This is all open interest. So this would be the expiration on each expiration. And you get to see the open interest. Now, why do I show this? Open interest is basically telling you where the bets are. Where's the money? Where's the money being placed? Where are the bets? Where are people looking to, switch, change the risk reward profile of their portfolios? And with something like the SPY, I talk about, that there's no puts and there's nothing there. Here it gives you a visual, right? So if I just wanted to say, okay, 370 to, let's call it, I gotta fix that. So 370 to 379, let's call it 380. Excuse me. So if I just put from 370 to 380, and I have now just shaded, I just want to look from 370 to 380, and then I want to click, the top 1% positions, where are the top open interest between there. These are the top, and so we have X number of cells, and I'm just taking the top 5% of cells. We could sort of see where the bets are being made and how big these bets are, right? How big the bets are. And what I've been saying, and it's incredible. There's not many puts out there. We are at all-time highs, and this has been going on obviously for a while. The buying doesn't stop. People are tired. People have not bought puts the way they have in the past. A lot of puts, to give you context, a lot of puts would be 250 to 300,000 options. Okay. You don't even see more than, you barely see more than 25. This is one day. This will be gone tomorrow. Okay. So there's day trading today. We don't have today's volume in here. This is as of, 6 o'clock this morning. This is how the screen looked. There's nothing here. Okay. There is a little bit here, some here. You could see some here popping up. Okay. You could see, some here, but there's nothing is over 50,000 except some here. And this actually might even be a sale. Right? We're not even sure what's a sale. So if these were buyers, if the customers were buying, this would be all, this would be very light. Some of these might even be sales. Like somebody might have the 380, 370 put spread on for 10 points, right? So it's trying to give you an idea of where things are. You can switch to calls if you want. Let's just take a look at, our friend AMD, right? So we have AMD, and we want to look at let's take a look at 90, the upside in AMD, because we've been talking about these semis, so if I'm going to look at AMD from 90 to 110, and I can click here, you could start seeing where the call bets are in AMD and if they're large and how large they are, right? So you start seeing 15, 14, on single stock names, anything above 15,000 starts to be decent, 1.5 million shares, 1.4, 1.7 million shares, 1.11 here. So, that's the 95s, the 90s. There is 30,000 here, 20. That's a lot. 30,000, 3 million shares. Is that long? Is that short? Ultimately, I'd like to, figure out and build something where I'm looking at historical data. That's going to take a little bit of time. But right now, I'm trying to give you the story of where the bets are. The next question is, what happened? How did that 30,000 come into play? When did it come into play? What happened that day, right? I want to be able to click this and see for myself what happened on, let's say this was traded 5 weeks ago. Well, what was going on that 5 weeks? I want to click on that, and I want to be able to go back 5 weeks on that date and put myself in that date and see what happened. That's going to be, where we're going to next. So this is the type of stuff that's helpful. You see the big wall of calls right here, right? But it goes now. We've been living this story for about 2 weeks where there's been a lot of call buyers, right? And Jaron was talking about call buyers. The stock was 94 about 2.5 weeks ago, and that was a flurry of call buyers. But we then found out just last week that Intel CEO changed. And now if you look, you can look at the semis. Micron is not trading as strong. It was actually down before. It's not trading as strong as some of the other semis. Take a look at AMD. Micron, AMD is not trading as strong. Micron is trading strong. TSM is trading strong. Some semis are trading much, much stronger than others. AMD, even Intel's not trading as strong, but it had a big move that last week. This is under $90. We talked about it, how, these things, they're stories, right? And they're developing as time goes on. And we talked about the possibility that because people were aware of an Intel CEO change, or they became aware of one, that they started getting out of AMD stock and just buying calls just in case. So this is just a risk reward transfer here, as opposed to somebody thinking that for sure the stock is going to 120. I'm very confident there. They're more unsure about the downside. And if you look at this, and 90 was the level, we want it to be bullish again on AMD. You want to see 90 break through with good volume, and because right here it's looking a little weak, breaking the 50-day and just looking a little bit weak to where, where's that buyer? Where's that buyer here that was there? He came here. There's no buyer anymore. And it coincides last week with an Intel new CEO. There's something fishy going on here with those calls. I wasn't confident back then. I'm still not confident now. I'm a little concerned that was just a risk reward trade. I'm still watching. I want to see the buyer step in. Where is he?
Okay.
So that's AMD, and that's sort of, again, to come this open interest tool, I'm going to try to get this out there hopefully this week, but it's something that I think is the start of doing more analysis, the start of it, and also to show you where the bets are. And remember that this becomes a wall, right? When there's too many calls, remember, let's put you in the position, Marco.
Okay.
You have the 95 calls. You own all of these. Let's assume it's just you. Nobody else is in the market. Just you. You own 10,000. Another 12. That's 22, 25, 27, 42,000. Call it 15. That's 57,000. 57 plus 5 plus another 6 is 68. 68 and 17. Let's just stop there. 85,000. 85,000 options. Okay, 85,000 options from here to September. We're going to get rid of these 30, call it, right? Because I just want to look up to March. So 55,000 options over the next, let's call it 8 weeks. That's 5.5 million shares. You have the right. You own all of these. Okay, let's assume you're a billionaire. You own all of these. Well, you have 55,000 call options. If the stock goes to 100, what are you going to do? What do you have to do at some point? I mean, you don't have to because you can buy the stock, but in general, you're going to want to sell those calls. What happens when you sell calls? You put pressure on the stock. Putting pressure on the stock towards where? Towards 95.
Right.
So this becomes a little bit of a, I call it a stop sign. Doesn't mean that you're going to not, you're going to stop and then you're going to keep going. But there's got to be some pause when you have 5.5 million shares for sale. Just you, right? Just the options market. Okay. Now you get through 100 and look what you got out to March. You got 52, 38. That's 9. What's that? 80, 90, right? Call it 90. 90 and so you got 105. This is today, so that's going to be gone to, this is Friday. Yeah, so you got 90, 95, and then 107. So 107, you got another 10.7 million shares likely here that's got to change hands. Sure, there was some selling, but remember, they were buying these. They were buying these 2 weeks ago. So generally, they're buyers of this, hoping that earnings are going to be good and that the stock goes up. Well, if earnings are going to be good, you're going to have 9 million shares for sale up at 100. You're going to have 3 million shares at 95. So it becomes a little bit of a stop sign. That's why you look at open interest. Where are the bets? Where are people waiting for the stock to go up so that they can sell? And when you see that, when you see a wall like this, and the stock, let's assume AMD has phenomenal earnings. The stock opens up at 108. What might you think is going to happen? I would think in the morning, in the first half hour, you're going to see all these calls come for sale. The stock gap. And so you could sort of say, in the first hour, this stock might actually go down $2, $3 because people are trying to get out. And how are they getting out? They're selling their calls. So that's how you sort of look at open interest if you wanted to try to trade it or try to understand, after earnings, what do I think I want to do? Do I want to hold it? Not. Maybe for a quick trade, you might say, you know what? All these people probably have to get out. The stock up $20 on a fantastic earnings, whatever. Maybe I should sell a little bit here. I want to beat Marco, who's going to be selling 10 million, 13 million shares.
Cool.
Okay. So something to think about.
Nice. Great tool. I love it. I've been playing around with it. I think people are going to really enjoy it.
Okay, good. What else are we looking at? What we want to take a question from? What are people saying? I don't know. I'm not even looking.
Okay, yeah. So we've had some questions, some good questions, but let me just see real quick.
Anything
We've
on
been
that?
seeing some EOAs. Yeah, some COAs. There's also been DDOG that we wanted to take a look at.
DDOC. Okay, let's look at that one. DDOC. Or DDOC? DDOC?
DDOG.
Oh, DDOG.
Yeah.
DDOG. DDOG. Look at this DDOG.
But yeah,
So yeah, so okay, so not that like so let's take a look, yeah, let's look at this. Just so you see, I want you to see Palantir, positive, 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 up 7 points, three, see, okay, positive, right?
mhm.
Now, yeah, the back end, okay, fine, people are selling it, but positive in the near months. Now you look at DDOG, and it's like, forget about the 1 week, positive 2.2, 1.7, not terribly exciting. I'm wondering, if there's real buyers in this, how come they're not pushing the vol a little bit higher? That's my first inclination. So just visually, you could see, okay, like what's going on? Let's take a look. The 9,000 here. We're looking at February 12th. Okay, it's earnings, so somebody might be playing some sort of earnings play, and I don't see much. Where is it?
All the way down.
There it is. Okay, there it is.
Right.
So the 120 calls, 9,000 traded, and let's just take a look. Let's take a look. Here it is. No spread. Traded at a 68.5 vol. And where is it now? 69, 76. So it looks like that might have been up a little bit. I'm sorry, down a little bit from yesterday. Got to figure that one out. But I would say that 1042, $1.35. It's traded at 1050. Let's take a look at our chart. Let's see. What is this? What is this? 1102.81. So it looks like it was a sale.
Mhm.
And frankly, that would make sense if it was a sale. Somebody who owns the stock has been languishing around for a while. So somebody may own the stock and just say, you know what? I can take in $1, whatever they took in. What did they trade it at? $1. I could take in $1 and own the stock. And I think it's going up, but I don't think it's going through 120. They're also not even close to this window where the best guys in the world generally buy. Like if you wanted opportunity, if you were looking for opportunity, you would be buying in here as a big guy, right? When you see something trade outside this box over here, you got to wonder what they're doing. So they're either short the stock, and this is a way to protect the short, because in this world, the shorts, you're going to start seeing more of these because the shorts are concerned that these stocks, remember, stocks are unlimited to the upside. There's limit 0 to the downside. So, they're not, if he thinks, say somebody's looking at this 98.91 and thinks that, I think this is a sale, but if it was a buy, it could be a short that thinks, the stock should be 70, and he's playing for 30 points, almost 29 points, but he doesn't want to get caught in this, whatever might happen, maybe a takeout in a DDOG, or some sort of short squeeze where the thing's racing, and at the very least he's stopping himself. So if there's a buyer of this and it's because they're short, then what they've done is they've created this put. So if you're short stock and bought these 120 calls, then really you are long this put. You buy the calls, you're really buying the puts if you're short stock. So could be something like that, or it could just be, and I can't tell. It looks like they sold it. It would make sense to me that they sold it, but that would be, I'm 75% sure that they sold it. But if they didn't and they bought it, it's probably a short, because usually they wouldn't buy this one. The top guys for opportunity wouldn't buy it. They would buy it for disaster protection in case there's a short squeeze. Or and how do I know that? Because it's in the shaded area outside of where they usually buy. Or if it's someone who's just selling, then it's just taking in some premium and that's it. But this board here is not showing me super excitement. So it is a good one to look at, because it's like a sniper. Somebody's came in and just done a trade there, but it's maybe not what we're exactly looking for.
Okay. Great. Thank you.
Good. What else? Is there anything else that let's go look at the
Let's go look at one more.
I know, look quickly.
BBB.
General Motors. BB.
BBBY or BB, whichever one you want.
BBBY. Oh, BB. Bed Bath and Beyond.
Yeah.
Gotcha. Let's take a look.
MB sent it, and it looks like January 29th, $30 calls. Seems to be a buyer.
Which one?
January 29th.
This name people have been another name people have been playing around with on the short side. The 30 calls. Yeah. Why would somebody buy the 30 calls? You know, people are talking about potential short squeeze in this, I think. Why would somebody buy those calls? It's an odd, to be honest, it's an odd call to buy, frankly.
It's unusual.
Yeah, for sure it is, for sure. I don't know. Let's see here. So you see the vol spike. So it looks like someone bought the calls. Stock is not moving up that much. The stock's up moving up 50 cents. Looks like they bought them again here. It spiked. Calls. This one could be something, I would say, again, a short player is my guess. My guess would be a short player. Stock just came from 19. Let's take a look at the stock. You know, we're starting to, you notice that we're starting to see more of these way outside out of the money calls. And it's odd for the big players to be playing those particular options. But you see that the stock just went from 18 to 27.5. This is likely a short squeeze or a part short squeeze anyway. And I believe, without even looking, I believe BBBY had them big short interest. So just a name in the past that was trading like it was supposed to go out of business, and then it just traded up. We had been short BBBY back in the day, and it was a tough short. So this might be a short squeeze as well, here to here. And if you learned anything from, you know, GME, where they're shorts and they got a lot of days to cover, you know, these things could continue violently. And I think the shorts are waking up in some of their names and saying, we can't have this. We can't, you know, we can't have this risk. It could also be, frankly, a bank, you know, and why would I say that? Because, you know, when you're at a bank, where was it? When you're at a bank and I'm sitting there and someone is buying, even if they're buying puts or calls, they're buying options, right? You know, I, as the bank, have to sell those options. And, you know, people could have got killed on, the banks could have got killed on the GME trade. You know that GME trade?
Yeah.
So that guy, Melvin, he was long 50,000 put options. Well, if I was short those put options, what was I doing? I had a short stock against it. So I was short the put option, short stock. I got blown up on that. Like, that trade could have cost me, at whoever did that trade, it could have cost them $50 million. No kidding around. And that's the danger of these things. And so what you're starting to see is very large trades like this. Why? Because someone may have risk, or they may have, you know, some bank may have risk on their books that is too large and for the bank to hold. And the bank's risk management might say, Felix, you're too big in this. You see those calls right there? I want you to pay 30 cents for 40,000 or 30,000 or whatever I want you to do. And I cannot say anything. I can't say, yeah, those stink. The vol's bad. I'm going to lose money on those. It has nothing to do with me. The bank, Goldman, Bank America, when risk management decides that we don't want to take that risk, you know, we see the situation out there with the shorts and squeezes, and you have a very large position. We want you to buy those for 35 cents just because we said so. And you have no choice. And so the person goes out there and says, okay, no problem. You know, my answer is, yes, sir. Do you want me to buy any more? Like, you know, yes, sir. I bought 35,000. You want me to buy any more? You know, you just have to take it. And that's what it is, because they've deemed that the book is too short volatility and it's too dangerous in this market. And that's what they want to do. Period. End of story. There's nothing you can say or do. Yeah, but I'm going to lose $2 million in this. Doesn't matter. We don't care. You know, you're lucky you're looking in that seat, right? That's the answer. So we're seeing a lot of those. I think it's very unusual. I suspect it's either short buying those, or it's a bank trying to protect a very large position. You know, I'm telling you in that GME that the short could have made a lot of money himself, even if he covered, like we said, 40, 50%. But the bank likely lost a small fortune.
Right.
Could have lost 40, 50 million, easily 40, 50 million. It was, let me tell you, it was an 80 delta. So if they were fully hedged on an 80 delta on 50 million, that means they were short 40 million shares. 40 million shares, the calls were worth pretty much zero at the time. So they were short the 24 puts, 8 million shares. So above 24, the thing traded, rocketed all the way up to 35, 38. They could have lost, let's just call it on average, $12. 12 times 40 million shares is 50 million bucks. There you go. 48 million. So just as back in the envelope, this is potentially what could happen. You know, that trader, whoever he went through, Melvin went through, that trader might be game over for that guy. Okay. So he might have just taken a seat and said, you know, get out of here. And that's it. That's the name of the game, right? And so you're starting to see, I'm starting to see more trades outside here in this shaded area, which is telling me it could be a bank. It could be a bank saying, no mas, white flag, buy these calls just in case it blows up. We'll make money if it blows up. But we're surely not going to lose another 20 million because of some short squeeze on some name that you decided it was high vol and you want to sell high vol, and then the thing explodes and we get killed. You know, that's the risk. So anyway, so that's,
we're running out of time. We should probably call it and then pick up tomorrow. Yep.
What time you got?
It's 2:17.
Oh man, it's way over, man. You owe me another 17 minutes.
Oh gosh.
All right. All right. Well, good. Thanks a lot, man.
All right. Thank you,
We'll
Felix.
see you
This was
tomorrow.
very helpful. Thank you for everything. And guys, I want to thank you as well for commenting, helping us grow, subscribing. You know, we appreciate it, and we're looking forward to seeing you all tomorrow. All right.
Be good. Thanks.
Bye.